Hey everyone, Merry Christmas, Happy Holidays, and welcome to the weekly review. This week I don't have a lot of new stuff because it's basically waiting for the playout of the up until the end of the month scenario, and that's probably what we're gonna get. This was what I posted on when we were here at the midpoint, and we had two scenarios: go up, go down. But basically, we were in this broadening formation. This is a price discovery pattern in which the market doesn't know what to do. Basically, it tries to go higher, it tries to go lower. Every move gets rejected, but it takes out stop losses. Like for example, this would be a level. Sorry, this one. This would be a level, and let's say this would be a level. uh, or I'll start with this one, okay? And this, let's say someone shorts. This high here would be their stop. Let's say they started around, they shorted here or they shorted here, and then their stop loss is when the market goes above this level. The same kind of logic here. This is their long, let's say, and their stop loss is this short, this level, or maybe this level. Let's say it's this level for now. So when the market goes below this level, they get stopped out, and that's why the market kind of takes out the lows and the highs. So it takes out stops and then reverses. Takes out stops, then reverses. This is kind of how it works with the broadening formation. And it's a price discovery, like it goes higher and lower than people expect, and then reverses. Uh, and what happened is we went lower, but didn't take out the stop. We just filled this gap here from overnight, and then went up. We are at the highs, but we haven't stopped yet. Pre-market, we are around here, I believe. US 500 is 0.35 up. This is approximately where we are now. Let's like this. This is where we are pre-market now at 474-ish. How do I know this? Is we are at the 1900-hour candle, slightly below the high. This is the 1900 candle, slightly below the high. So let's do it like this. So 474.5-ish, something like this. This is where we are. And because we're in this broadening formation, I expect we will take out the highs. Let me turn on some of the levels as well. Interested in the all-time high candles, something like this. These two. Okay, so let's go back to the hourly. Let me do the fuck. Okay, this. And our target is the end of the week, Friday, 2300 hours for me. This is local time zone, so it's actually end of day market hours on Friday. And we extend this. What we should see this week is an attempt to break out. Maybe we see the all-time high tested, but this seems relatively unlikely. The more we approach 480, I mean, no, it's likely, but it's unlikely that we go above 480. We may just nudge above it or something like that, but it's unlikely that we will go above it because time is running out for the bullish scenario, and we need a larger pullback to actually go higher. And I think we go higher, but into January. So I deleted all of those. Now we are here, let's say. What I expect is not a lot of movement intraday this week, but we keep gapping up slowly over time until close to the end of the week. We also have the JPM color trade happening probably on Thursday, yeah, on the 28th most likely, and we should be pushing into the all-time high area, retest this broadening formation, take out these highs and cause another squeeze of the shorts because we take out the previous high, And when we take out the previous high, just like we did here, it's likely we get another surge. Like we took out this one, we retested it, and then another small surge up, then we get rejected and have a bigger drop. And this is kind of the pattern I expect we see here, but only this time this is the high. We slowly grind up to the high, and surge if we when we take out the shorts, back test, and another surge that takes us to the high of the week, and that will be the high of this whole move up, and then we should have a substantial drop. Maybe we even go and take out these lows here, but once we hit the lows, it's kind of done for the move down. So this would be about 15, 10, $15 drop. We'll be at 478, maybe even 480, something like that. And then we have a $10, $50 drop, 10 at the minimum, probably like 15, but this is supposed to be it. Like when we hit this broadening formation at the lows, if we do, we may not do that. That's kind of the signal that the move is over. And we have several AV ups that will probably tell us the same thing, like this one. If we extend this one, uh, it will hit the extremity like a 2 deviation, 3 deviation around this point, like 470, 465-ish, something like that. So uh, expect to push into 480 following similar pattern, meaning we take out the high, we surge up, we backtest, this becomes support, we have another surge up, and this will be times up kind of thing. We have a correction next week, or not necessarily beginning of next week, but sometime next week we should start a correcting wave, maybe on the 3rd, something like that. Um, and then that should take us to 465. And again, this is price discovery. The market doesn't know if it should go higher or if it should go lower. Once we break out of this broadening formation, that will be direction for probably until OPEX. But I don't expect we break out of this formation until OPEX, when it will be probably to the downside, or even like we go back up, we make a new high, this will continue. Let's say we go, OPEX would put it at, OPEX is on the 15 or something, and is OPEX 19th. Yeah, here. So it's 486-ish, assuming we go down. Like if we don't go down, what can happen is we hold on the 50% level. This is the 50% level like we did here, but we will eventually go down. What I mean by maybe we don't go down is maybe we go up, we bounce on the 50%, that would be like a $10 bounce. We go up, and the bigger drop comes later. But once we drop below the 50% level of this broadening formation, we should be going toward the lows of it and take out these lows for sure. Maybe not go as this much below them, but we take them out nonetheless, even if it's briefly. So this is where we start considering buying the dip for the OPEX rally. Okay. Yeah, so that's kind of it. Nothing out of the ordinary or that special from how things are playing out. This week is going to be low liquidity. Low liquidity doesn't mean low volume, but it usually means low volume. So liquidity doesn't mean it's basically the imbalance between buyers and sellers. That is liquidity. When there are too many buyers or too many sellers, and this week we are bound to be in an environment where there are too many buyers and too few sellers. That's why we will slowly grind up as we move up, but nobody's expected to go out of position or something like that until the end of the month. And maybe they take some profits here. This will give us a pullback to at least the midpoint, potentially even lower. I expect the even lower part and go take out this low here. And then we have another rally, like this is 465 to 485. This is probably going to be like $20 rally, so it's substantial. And then probably around OPEX we reverse down as well and have a bigger correction. We shall see. For now, this is the expected path, and I'm gonna be looking for opportunities to short towards the end of the week. On the individual name side, it put a lot of stuff here, but I'm looking for an entry in Nike. It had that big drop off from earnings, like I said. I posted it on Twitter. Uh, Expectation. So we are at the confluence support of this trend line that we broke out of recently. Horizontal level from the COVID lows, and expectation is around. This is the midpoint of this range. So from the lows down to here, 105.98. This is the midpoint. What did I 6.3. Yeah, I didn't have set it right correct on the first try. So 106.03, this is going to be my entry, and I would expect we will retest the highs of this here at 123 in potentially as quickly as January OPEX, but probably like over a month or two, something like that. So I like Nike here, and that's kind of it. Um, I am reconsidering the Chinese names. So, in case you didn't know, there was some news about further regulation to the gaming sector in China. It caused a big drop in Chinese gaming names, especially like NetEase was minus 25% at some point. Uh, my background is in game development as a producer. I can tell you that if those rules come to pass, these names are absolutely fucked. Like minus 16% is nothing. They should go down 80%. Because mobile gaming, especially, is extremely whale heavy. They do like 80% of their revenue from like 2% of the users, maybe even less than that. Like on mobile, 2% of users are payers, and 2% of those are Uber whales. Like they Uber whales, meaning they do like tens of thousands of dollars of spending, maybe even hundreds of thousands of spending. And those users are the ones that are going away because of the new regulation, like spending limits, um, not being not being able to have retention, increasing features in games like daily reward stuff like that. So if those things become law, these names are fucked. And I am not that excited about Queb, especially, which broke down here. And even though it recovered a bit, I don't like it at all. Uh, there's a big component of Queb constituents is the gaming stocks, and I don't like those at all. Like even if they recover, I'm happy staying away. I don't give a shit. I would rather holdings not get fucked by that. So Baba, Tencent, PDD, NetEase, JD, and so on. Uh, because it has Tencent and NetEase at a pretty high percentage of assets, I don't think Web will do well. On top of, I still like Baba and JD, but I think they will get brought down or slowed down by the others. China needs to go lower to go higher. So let's look at SHY. This is a very ugly candle. It should recover a bit, but this looks like a double rejection to me. So first rejection, second rejection. Uh, if it breaks this trend line and it makes a new low, I think it does another leg down to at least like 15k, something like this, and that would be the buy there. Looking at Chinese stuff, I think they need another leg lower to become absolutely uh, bargains. They are bargains even now, but they need like that what's the name, capitulation kind of drop, and we had it here in the what's October low. Like we were very low. It was looking good. We had bullish divergence and stuff like that. But even that, we still had a 12% drop in BABA, and that was the low. And the pre-market drop was something like 8, no, even more. The high was here. So it was actually 19% drop, even after dropping a shit ton. And I think we're setting up for Chinese stocks to do another day like this, in which even though they are down, we actually get acceleration down instead of a recovery. And because people have bought them expecting a bounce. That bounce doesn't come, and then we have a capitulation move. People get stopped out again because we take out the lows, and lots of people get stopped out. That amplifies the drop, and so on, and it causes a big drop. So I'm still more confident in something like Baba, JD, Baidu, stuff like that that isn't affected by gaming. But because gaming will be affected by regulation, it will affect the whole Chinese sector. So that's kind of the logic with it. Uh, I kind of think we get the capitulation move like we did in PFE, for example. PFE super bargain, again bullish divergence, all of the good TA stuff, but we still had a capitulation move of minus 10%, which is a lot for minus 987 at the lows, which is a lot for something like PFE. So this is the same vibe I'm getting for the Chinese stuff. That we will get a capitulation move and that's going to be a good buy. But until then, they started to not look that good right now. Let's look a bit at mega caps. Tesla still looking okay. It's has a pennant here. Oops. So another consolidation. It can break out to the upside. It can break out to the downside. On the downside, I think it stops relatively fast, like on this trend line here, probably 244-ish. That's the buy if it breaks down, and expect a strong bounce. If it breaks out, it goes up directly. That's kind of it. Um, Apple looking very toppy, didn't break out, got rejected, but we should see a back test, and then another the leg down should start. Nvidia, same-ish, also has like a small pennant here. Probably 511 is the top, and we don't see it go higher. Google had a breakout from this pennant, waiting to see what will happen at 143. I'm not very confident in them in the mega caps right now. Amazon also with the breakout and consolidating, it still has room to go a bit higher, but don't expect anything super big. Uh, Something like this. So 160, 163-ish, something like this if it goes for another leg higher. But 160 should prove a bit of a resistance if we go higher. Microsoft sort of broke out, sort of not, it's not clear. But it also has a pennant here that can go higher or lower, don't know. Meta broke out. Again, a bit weak. It could go higher, considering we're in the last week of the year, but hard to tell. 375 would be a target if it goes higher here. Netflix getting multiple rejection candles. So first one here, then a bit of follow through here. I don't think it breaks down yet, but it should go sideways for the entire week, and then we may go lower. For oil, we got that news. Soil on the Red Sea, uh, ships refusing to go to the Red Sea. which caused the higher a move higher. Now we have not back to back, but we have double rejection here on the trend line, and I still think it goes lower. I think over the weekend we also saw news from Maersk that they are partially resuming going through the Red Sea. So that should be bearish oil, and I would like to see it go to 70, retest, and then have the big breakout into the beginning of 2021, 2024. Sorry, the fuck was I saying? Yeah, that's kind of it. Hope you guys have a good one. Bye bye.